Good morning, everyone, and thank you very much for joining me. This is the DAX Open with myself, Russell Shaw, Senior Market Specialist at FXCM. My email address is r@fxcm.com, and today, Tuesday, and it's the 25th of January, 2022. I'm just going to bring up our high-risk investment warning. I'll keep this on screen for a few moments. What we'll do is go through the CNBC morning note just to get an idea of the headlines, and then we'll do our analysis. Here's our market commentaries disclaimer. And here's our references. Okay, let's bring up the chart in the interim, and then we'll go through the CNBC note. Just before I do that, next week, I told you guys we're going to do the macro analysis. That's on Thursday. Friday, we're going to do the live trade, the NFP live trade. So I'm going to just put the NFP link on the chat for now. I did put the Outlook 22 yesterday, but there is going to be a mail sent out fairly soon with regards to that. So I'm just going to put on the NFP for this morning, and then we'll. If anybody needs the other one, just email me, and I'm happy to respond. Hey Katie, hey Howard, morning to you guys. Thank you everyone for joining. Let's just go through this this morning note, and then we can do the analysis. And so the headline reads: European stocks head for higher open as volatility grips global markets. European stocks are expected to open higher on Tuesday as investors in the region appear to shrug off volatility in global markets at the start of the week and concerns over Ukraine. The higher open for European stocks comes after they tumbled on Monday following wild volatility on Wall Street. Investors are now bracing themselves for an update from the US Federal Reserve and remain focused on tensions between Ukraine and Russia. The Federal Open Market Committee starts its two-day meeting today, and it will decide on the next steps for US monetary policy. An interest rate decision is slated for Wednesday, 2 p.m. Eastern Time, which is, I think it's, my goodness, I can't remember if it's 8 o'clock or 9 o'clock. Let me just bring up my calendar. So locally, it's going to be 9 p.m., which is 7 p.m. for the UK. So 9 p.m. FOMC statement, ZA. 9:30 is going to be the FOMC press conference. And we're 2 hours ahead of UK. So it'll be 7 p.m. and 7:30 p.m. In the UK. Let's just carry on with that. Let's just carry on with this morning note. Rising inflation is a major concern for the US Central Bank, and investors will listen closely to hear how worried the Fed actually is. Chairman Jerome Powell is due to brief the media over the FOMC releases. After the FOMC releases its statement, the Fed is not expected to begin hiking just yet, but the central bank is expected to maintain a path towards higher policy, towards tighter policy this year as it fights the highest inflation in decades. Market is expecting the first rate hike in March, but I guess the obvious commentary is just be extremely cautious over this time. The Fed has been very good in their communicating with the market. I don't think that they will raise at this meeting. I think it's just going to be too disruptive to the market, considering how volatile it is. But nevertheless, just be very cautious over the release. Markets are also nervous that there could be an imminent military conflict between Ukraine and Russia, although high-level talks to avert a confrontation are ongoing. President Joe Biden spoke with European leaders Monday afternoon as the US considers deploying military personnel and equipment to the region amid the rapidly deteriorating security situation. In Asia-Pacific markets overnight, Japan and Hong Kong stocks dropped as much as 2% as regional markets tumbled after a volatile session on Wall Street. US stocks had sold off earlier in their trading session, but mounted a dramatic comeback as investors stepped in to buy beaten up tech shares. US stock futures fell in early trading Tuesday. All right, just one last paragraph here. Earnings come from Ericsson on Tuesday, and data releases include Germany's IFO business climate data for January and UK business optimism figures for the Confederation of British Industry, which I wonder if they may even be already out. I'm just checking. It's not even on my calendar. I'll not sure when those have been released. Let's just talk about this rally. So you can see even with the let's get the daily here. See, this is the day. Let's do it on this chart. So you can see there's this big hammer over here. So what this is basically saying is markets sold down, and we're looking at the DAX. Markets sold down yesterday all the way to the low. At the low, the bears lose control, bulls take over, and we end the day well off of yesterday's lows, with the bulls presumably in control at the end of the day. And I'm just reading Pete's note here. He said, was it an exciting day? Madness at work. But certainly the volatility is there for sure. This is a tough market. It has been for the last few weeks. The only conclusion that we've really drawn over the last few weeks is uncertainty, which is not it's not all that satisfying conclusion. We want kind of the are we going up, are we going down? But the idea is uncertainty is risk. That's the idea, and that's the theme that I think we have constantly been talking about. Let's approach the weekly chart exactly like we do any other day. And what we did yesterday is put in an HT question mark. In other words, looking, is this a potential correction here? And after yesterday's price action, the answer to that is no. It's actually taken out the previous higher trough. So let's just keep this to the side for the moment. Here was the reference trough. Here was the reference peak. Here was the reference higher trough, and here was the reference higher peak. That was the bullish price action. What we suggested, though, it's very hard to really get a bead on how strong that trend is because we're still confined within these within this narrow range. So it turns out that it wasn't a strong bullish action at all. And this is not a higher trough question mark. This can be relabeled. This now we're going to call a lower trough. Okay. In other words, the uptrend, this very brief HTHP, that's now negated. So that bullishness is gone. The question now is what happens next, and that is a incredibly challenging question to answer. And the reason is because we're not trending either which way. Now we've gone back to ranging. Okay, now we've gone back to ranging. So we had this very brief sort of glimmer that perhaps will break out of the range, and well, that was effectively ended yesterday, and now we've got just 2 points and not 4 points. So this is now how we're going to have to measure the markets. We're going to have to try and see how price action evolves from this. So if we have something like this, okay, clearly that's going to be painful. But it looks as if the support came in and held, and you can see that this does seem to be a obvious level of support. So you can see it's hit it here, it's hit it here, it's hit it here, it's hit it here, and now it's hit it here. So the question is, do we get some sort of bounce? And that certainly may be something that can be expected. We had this very huge sell down and overshoot. Bulls came in, took advantage of the overshoot, but the trajectory here is important. Do we get something like this? Okay. That would be a bullish scenario. So we'd get the trough peak, higher trough, higher peak. Okay, that's the optimist in me, right? What happens if we get this? This is going to be, this would be very, very serious, technically speaking, because then we've got a lower peak, lower trough. Which one is the more likely scenario? And the truth is, I don't know. We are in a situation where we're going to have interest rates that are going to be aggressively moving upwards. We've spoken about the fact that interest rates in of themselves put a pressure on present values. Okay, so I think the Fed, the market now is looking at the Fed for some sort of signal. Is the Fed going to say, well, we're going to start hiking in March? We think there's going to be 4 rate hikes this year. That could, that could cause this sort of type of action. It doesn't really concern us as traders whether we have an uptrend or a downtrend. Typically, the downtrends move much quicker, but the market has a bias to move upwards. Okay, so at the moment we've got neither of those. We're stuck in the middle of a range. That makes this very difficult to trade. So if we go down to our daily chart here, the daily chart suggests, well, just be careful. Yes, there seems to be some sort of support here, but we're trading in zone 3. Okay, not only are we trading in zone 3, okay, so the cash market's just open now. Just give me a few seconds and there we go. All right. Not only are we trading in zone 3, the volatility is increasing. Okay, so we've got a volatility increase. How do I know that? Bollinger's are starting to push. Okay. What else? What else? Take a look at our stochastic. It's in that 20 area. As long as we stay in that 20 area, the pressure remains to the downside, not to the upside. Remains so we need to get the stochastic out of this 20 area, and we're not really in a position to say the market's oversold yet, because it's not according to our measure. So there is still significant danger here. What I'm trying to say is the market can have overshot, and that is one of the anomalies in efficient market theories. There is overshoots either to the upside or to the downside. Of course, you see them in hindsight. It's hard to trade them in real time, but this could certainly be an overshoot. So we watch for that. And by the market action yesterday, it seems like, well, it could be an overshoot because there was support coming in. You go back to the weekly chart, it looks like there's this significant support. I want to just reiterate the fundamental situation is uncertain too. We've got this very worrying geopolitical crisis on the Russian-Ukrainian border, and we've got monetary policy, and we're uncertain in terms of the aggressive pace at the moment. My expectation is that it's going to have to be aggressive, and if it is aggressive, that's going to pressure the market. Why do I think that it's going to be aggressive? Because I think the Fed is behind the curve. We've discussed this previously, and because it's behind the curve, well, it's got to play catch up, which is extremely difficult. Now, the obvious question, the obvious sort of statement to that, but Russ, there was this massive bounce. Surely that could be some sort of buy the dip opportunity. I'm going to say two things about that. The first one is that it's high risk, and with high risk comes the prospect of high reward. So it can be a buy the dip opportunity. Of course it can be. But I would also say that don't try catch a falling fridge. Okay, I've seen it happen many times, right? People try and pick the bottom. It's inevitably not the bottom, and the panic selling hasn't even really started. I don't know if there's going to be a panic selling, but if there's a salvo on that Ukrainian-Russian border, that's to me really sort of a big factor in terms of moving sentiment. If there is a surprise rate hike, I really don't believe the Fed would do this. In my estimate, it would be irresponsible. But if there was a surprise rate hike tomorrow, I think that's going to cause all sorts of problems in a really volatile market. That's why I don't think the Fed's going to do it, but just be careful. There is, of course, a case to be made. Let's just see if we go through to the US oil here. I want to go through to the daily here. Let's keep on this chart. I just think using the sort of just the price chart is really instructive. No, we'll use the weekly, it's fine. Okay, so this is now lockdown. This is lockdown. There is huge capitulation here. Okay, huge capitulation here. At this stage, you would be quite correct in your assessment, saying, look, how much lower can oil go? This is an overshoot. This is an overshoot. Guess what? The panic selling hadn't even started there. This is a weekly, so there's the panic selling, and it makes this big sort of long-legged doji. But gee, this was just an absolute crazy time in the market. Nobody could see that. You only see it in hindsight. So my point is, if you are looking to, try and catch the dip here, that's a dangerous approach to the market. Stop losses, risk management must be emphasized. You have the prospect of high risk, high reward. So that is, let's just change this to instead of LT, we're going to now change this to T. So now we just got the 2 points, P and T. So without the next 2 points, it's difficult. It's really difficult. What I would suggest is that the active reference candle is actually to the downside. It's actually to the downside. You go through to the daily, well, you can see the daily is in zone 3. You can see the momentum is in the lower quintile. Approaching oversold, so it's probably going to get over, it's probably going to be recognized as overdone imminently, but we're not there yet. Go through to the hourly, take a look what's happening here. Okay. Looks like we're about to get a trigger on our moving average. And now we're going to have to see if the stochastic follows. So if we get a true trigger there, well, that's the bearish signal kicking in. And if the stochastic makes its way down to the 20 area here and holds, that is a bad sign. And you can see that's a bad sign because look what happened yesterday. Right, once it's and Friday, just so whoever was sort of on the short side, the momentum was with them. And the idea here is, of course, I don't know if we go into that 20 and we build a base in that 20 area, but if we do, it's kind of looking out below. So I'm looking at, I'm looking just personally, and please don't take this as advice. I just want to mention my thinking here. So I've been looking at Netflix. I've been looking at Netflix. Netflix been hammered. It's down, I think, around about 30%. It came out with poor forward guidance. Look at this gap down. It went down yesterday. I kind of felt, look, this is probably sort of nearly done. It's an overshoot. I wrote an article about it. The actual fundamentals, in my opinion, are looking okay. Is it worth perhaps trying to get in because this looks overdone? And I actually decided not to. I didn't put on the position. Okay, I didn't put in the position because Katie, it's going down because of poor forward guidance. Their subscriber acquisition rate that they announced their results on Thursday. Their forward guidance disappointed the market, and the market has punished them since. So I just decided it's not worth it. It's not worth it. Whilst I think that this is my personal thinking, it might be overcooked, but I need more technical evidence. So I don't need to get in at the bottom here, is what I'm trying to say. I just need to get in near the bottom. I need more evidence. And I would suggest that's the more prudent way to approach this, because I don't know where the bottom is. If I put in a long over here, okay, I am effectively, now listen to this very carefully, I'm effectively, okay, longing into weak momentum. It's like shorting into bullish momentum. It's a recipe for disaster. It's the quickest way to end a trading career. Okay, it might work once, it might work twice. Okay, it will catch you. You don't short into bullish momentum, just like you don't long, okay, into weak momentum. It's extremely dangerous. So yeah, this looks overcooked to me logically. I did I looked at the financials. I think this is looking like a really interesting company. I'm not ready to touch it yet, but it's on my watch list. It's on my watch list. So don't take it as advice. I'm just telling you what's going through my mind. So it's sort of trying to just convey a lesson. So now we go through to DAX. Okay. You want to long into weak momentum? Well, you can do it because there is the prospect of high reward, but gee, playing a dangerous game, because if that stochastic hangs around 20 and you long, you're on the wrong side, and that sell-offs are much stronger. because fear is a much stronger emotion than greed. So it's much stronger than when markets go up. So that's the I think that's the cautionary tale that we find ourselves in. If you decide, you want to get in either on the short side or on the long side, we're in an uncertain environment. I want to stress stop loss, risk management, responsible approach to trading. All right, let me just see, there's a couple of comments here. Pete's just saying price went to 148 area, supports needs to get below and close for a sell-off. Yeah, just again, I don't profess to know one way or the other. Just be careful. The momentum here is very fragile, very weak. If we stick around this area here, Pete, that's the underlying bearish momentum. If we can see the stochastic pick up, then perhaps there is the support coming in. Then we see that support level working. So watch that very carefully. Yeah, the UK is worried about Boris's birthday party. Yeah, certainly read that. Okay, let's just see. Okay, one more comment here. Howard just asking if I had bought Netflix, when do you decide to sell if you feel the market may go down? But I haven't bought because I don't know. It may still go down. That's the whole point, is that I couldn't get into that position if I had already bought. If one did sell and the market went up, would you lose a lot by waiting until you feel the market is going up? So there are a lot of sort of obviously questions in that, Howard, which don't have, that there's no definitive answer there. There's nothing I can say that doesn't have a chance of being wrong, and that's the nature of the markets. The whole point about trading the market is to treat it like a business, and that means having a business plan. In this case, it's called a trading plan. We need to know when the trading plan suggests it's good to get in. We need to know when the trading plan suggests it's a good idea to get out, and we don't deviate unless we find there are better ways of doing it. But going in without some sort of plan is not the right approach. So remember, we've got a huge, I think it's a 10 series webinar, 10 series webinar. I don't know what the right phrase is, but we've got 10 episodes of developing a trading plan because it's that important, and each one of those was an hour and a half. So that's a lot of material. It's no use trading on a gut feel. There may be a few very gifted people that can do that. I'm not one of them. So the idea is you need to have a plan. So I go back to Netflix. So what's my idea here with Netflix? Well, you go to the weekly chart. Well, gee, this just looks like one big disaster, So do I want to go long over here? Well, in my gut, yes, I want to go long because I feel it's overdone. Okay, but don't trade on your gut, okay, because it can get you into a lot of trouble. So I need to see some sort of stabilization here, okay, and not just sort of a one bar stabilization. I need to see some sort of base. I want to see that positivity starting to reflect on the daily, and then I'm going to go down to the hourly and see if I can get in fairly close to the bottom. I know I won't get in at the bottom. But I want to try and get in as close to the bottom as I can. And I would have a stop loss in because it could do this. Now I'm feeling like I've done everything right, and then it does that. Now I'm in big trouble because now it's got a peak, trough, lower peak, lower trough, lower peak, lower trough. So you go in, you have to have that stop loss. You have to have that plan to get out when the market. Now this is the big thing. When the market is not cooperating with your analysis, you're going to make an analysis one way or the other. You're either going to be long or you're going to be short, and you can be right, okay, but only if the market's going to cooperate with your analysis. It's not a personal thing. The market's either going to move up or it's going to move down. You've got to understand when it is not cooperating with you, then it's time to exit. Okay. Katie asking if I can go through Alibaba. That is a stock, Katie, I have never really monitored with any serious type of commitment. May I ask for a rain check on that, Katie? I'm begging your pardon, and let me just try and get my head around it. I don't know if I am qualified really to. Let me just take a look at it, and if we can, may we do it tomorrow, and I'll take a look at the and I'll try to do something on Alibaba tomorrow. Okay, cool. All right, guys, let's wrap up here, and then there won't be a US Open today. I'm still working on a few things and edits and re-edits, but we will chat tomorrow. Thank you very much, guys. Please email me if you need to, and have a terrific day ahead. What up?